I'm going to show you exactly how I would start day trading if I had to completely start over as a total beginner. I've been trading for almost 10 years now, and day trading has completely changed my life. I consistently pull profits like this, and this. By the time you finish this video, you'll have a complete trading strategy that you can actually go and execute today, even if you have no experience. Look, I didn't start out as some kind of trading genius. Before all of this, I built a multi-million dollar online business, and then I watched all of it disappear because of a brutal divorce. It felt like everything I'd worked for over a decade was being ripped out of my hands, and day trading is what saved me. I went all in on day trading as a way to get my freedom back, and I treated it like a profession. I studied, I tested, and I journaled. But even then, I made so many mistakes that I didn't need to make. Oversizing, blowing accounts, spending months and months of my life, tens and thousands of dollars because I didn't have a proper strategy. And that strategy is exactly what I'm going to give you in this video. So the first thing that you need to understand before we jump onto the charts is that you have to focus on the process and not on the money. I know the profits that I showed you at the beginning of this video are very tempting and they're super enticing. They draw you in, right? But the moment that you start actually chasing that P&L, the money, it starts running away from you. Money is just a scoreboard. It's not actually the game that you have to play. The real game is your habit and your routine, and most importantly, the mindset that you have when you're getting into this. The money shows up when your system is solid. If you're only focused on the cash, you're going to end up forcing trades and you'll end up picking up really bad habits, just like a majority of traders out there who never actually make any money doing this. And this truth applies to life in general. The more you chase an outcome directly, no matter what it is, the faster it slips away from you. If you actually stick with the process that I'm about to walk you through today, your path is going to be a lot smoother than mine was, and a lot smoother than what everybody else's is when they're first starting out in this business. The second thing is that every trader needs a plan. Most beginners jump from one strategy to another, watching every single video they can find, hoping that one of them is the magic solution that's going to get them profitable. And all that does is it keeps you stuck in a loop, constantly starting over and over again, never actually building any real skill. Without a structured plan, you end up skipping on really important basics because you rush into advanced concepts trying to make money. Most traders lose simply because they're missing key steps in their understanding of the markets. And when your learning has gaps like this, you can't tell whether your problem is your strategy, whether it's your psychology, your risk, or your execution. But having a good plan in place will help you fix all of that. It gives you a clear sequence of things that you follow one step at a time so you can actually build something instead of constantly resetting starting from square one. So before we look at any kind of strategy or model specifically to enter trades, we have to first look at the market basics and understand what are the building blocks of actually entering a trade. And the first step we have to do is understand levels. We have to understand what levels we're going to be looking for where price might react. So let's say we had a chart that was kind of doing something like this. What normally happens is people will say that price is very, very random. And to some degree, yes, price is random. We don't always know why price is doing what it's doing. But if we look at this chart right here, which is very terribly drawn, by the way, we normally would see something like this, right? People typically will call something like that a resistance up here. And then at the bottom side, you will be looking at levels like this where people will call it support. Now, that's all fine and that's great, but a lot of the time when people try to trade in this way, when they'll say, oh, price is coming into a level of resistance, I'm going to go and take a short. It doesn't really work like that all the time because not every single level is as important as we think it is. There's certain levels that are more important than others. And what we have to do is identify what those levels are, whether they're higher time frame levels or daily level or weekly level or 4 hour or 1 hour, right? There's so many different ways to identify levels. There's PD arrays like fair value gaps, and there's order blocks, and there's breaker blocks. There's so many different things, or there's just typical swing high or swing low. Now, a lot of these things might not mean anything to you, and if they don't, you don't really need to know that because I'm going to show you a very specific thing in a moment where you're going to get the key levels where we know that price is going to react so that you can go ahead and take a trade at those levels. When you have levels like this, right, and then you have your resistance or your support, and you then see a price move either outside of that range like this, when this happens, it's what we call a breakout, or it could be a liquidity sweep, all right? So sweep would be when the price comes down into that support level and then it essentially goes and trades back up. Or you have a breakout where the price comes outside of the range and then it actually continues to trade the other way. Now, when price comes into this level, you got to excuse me for these drawings, but when price comes into the level of support or resistance, that's when we can look to take some kind of setup. When those levels don't hold, like I showed you there, and the price actually breaks through those levels, that's where opportunity is going to show up for you. You only need one strategy, and that's the next thing. Most traders blow so much time by chasing different methods on YouTube, in Discord channels and courses, and the more strategies that you try to juggle and learn, the worse that you're going to get at all of them. What you need is one simple process, and that's exactly what I'm going to walk you through now. Now, the strategy I'm showing you right now is the one that I have been using consistently for a long time now. It produces excellent results. It's got a great win rate. And what you're going to do is you are going to arrive at your trading desk at around about 9:15, 9:20, okay? Because market open happens at 9:30. And very specifically, we are looking for a specific candle when it gets to 9:35. So you got to make sure you're at your desk before 9:30, first of all. Now, when you get to 9:35, what you're going to do is you're going to click on 5M, which means 5 minute, and you're going to jump over to the 5 minute chart. This specific candle here, you can see is labeled 9:30 because this is the 9:30 candle that we're wanting to look at, right? Now, remember I said to you earlier that there are always two levels, or levels specifically, that we are waiting for price to trade into so that we can get a reaction, right? Either price is going to trade into it and we look for a reversal, or it does a breakout and we look for a continuation entry, or whatever it is, right? But we need to know what levels we want to trade. Now, this is such a simple way to do this, right? Because it's just right in front of you. So you're going to come here when you got your 9:30 candle on the 5 minute chart. What you're going to do is you're going to get your trend tool here. So it's just a little line here like this. And I'm just going to put a high in there. And I'm going to put a low at the bottom of the candle here. Remember to include the wicks of the candle. Okay. Don't just do it at the body. You need to include the wicks of the 5 minute. So once you've done that, all we're going to do is we're going to switch over to the 1 minute time frame, and you will see that you've got 5 candles already printed, because obviously now it's 9:35. So you've got 5 1 minute candles that have printed inside the 5 minute range. And what we're looking for here is price to basically trade into one of these parts of the range. So you can already see that price has actually traded up almost into the range here. Now, when I say into the range, what I'm looking for is not just for the price to basically wick like it has here, right? So you can see that this is tapped the top. That's not what we want. We actually want price to trade outside of the range. So I need to see the candle go out of the range with some intention, right? So let me just play this out. So now that we've traded into the high of this range, what I want to do is actually take a trade here. Now, there's a couple of different characteristics we're looking for before we actually enter a trade. The first one is we have to get an energetic or a displacive push outside of this range. What does that mean? It means that price needs to really propel out of this range with some displacement, and ideally a fair value gap. Now, what is a fair value gap? Let's focus on this one right here, okay? So if you can see here, I've got this blue candle here, that's candle 1. You've got this big blue candle here, that's candle 2. And you've got this black candle here, which is candle 3. Now, a fair value gap essentially refers to the gap in between this candle and this candle, okay? What that means is that the market is essentially pushing in a specific direction. This only happens when there's lots and lots of pressure in that direction of the market. So here we can see there's lots and lots of buying pressure in that direction, right? That's great. Now, what I want is I want this kind of fair value gap to actually form when the price is moving outside of the range. So yes, it's great that we've got a fair value gap here, but what I want is a fair value gap here. So have we got one? Well, if we take a look here, it's not the biggest gap in the world, but we do have a fair value gap here. Okay, so you can see here, candle 1, candle 2, and candle 3. And inside candle 2, we've got that little gap, right? And the way we identify it is, again, this candle's high does not overlap this candle's low. So that's how we get a little gap in the middle, okay? So now that we've got a fair value gap printing out, that tells me that this price is moving in that direction. So we're going to be entering our position right on the candle close, just there. And for your stop loss, all you're going to do is put your stop at the bottom of the candle that has the fair value gap, right? So this candle has the gap just here. So all we're going to do is put our stop just at the bottom of this candle, right? Now for your target, all I want you to do is take the middle of the risk to reward ratio here. Just take a look at that on your long tool. And you're just going to increase your position until you get to a fixed 2. So what that means is that if you're risking $100, you are basically hoping for a reward of two, which means $200. All right. So let's just see how the trade plays out. And there we go. So target gets hit just here. Now you might be wondering why we're doing a fixed rate of return, right? Why are we just fixing it at two? Well, if we continue to play this trade out, you'll see that price actually ends up retracing and it comes back the other way. And if you had then put a fixed rate of just a little bit higher, let's say you went for a 3, right? Or I don't know, like 2.5, even 2.5, right? You'll see that the target actually never gets hit. So by having a fixed rate of 2, it really removes any potential or a lot of potential of price essentially pulling back on you and ended up stopping you out and you don't end up getting any profit from it. A lot of the time people don't become profitable because they're really bad at taking profit. This is something that I actually struggled with for a long time. Like I always wanted to hold on to trades to see if I can get a bigger move. But if you do this mechanically like this, it always means that you bank profits, and that's the most important thing. Let's go over another example real quick. So here's another one. We've got the 930 candle right here. We're just going to mark out our high and we're going to mark out our low. And then we just switch over to the 1 minute time frame, as I said before. And let's just see if price trades outside of the range of the bottom or the top. So in this example, we can see that price has traded outside of the range to the top again, to the upside. And if you've been paying attention, remember we're looking for a fair value gap when printing outside of the range. So right here, we've got a fair value gap, which is great. And what that means is that our entry now would be just on this candle right there. And again, the stop would just go to the bottom of the fair value candle here. And then we are looking for a fixed 2R. So once again, we're just going to move our long tool position until we get 2R on this, just there. And that's the setup. Just really easy, right? 930 candle, mark out your high and your low, wait for the price to trade into one of those levels, and you're just going to take a position going in the direction of the trend, put your stop at the bottom of the fair value gap, and execute the trade. Let the trade play out. And look, guys, you're not going to win every single one, by the way. There's no 99% win rate model, unfortunately. If there was, then I'm sure we'd have a lot of trillionaires. All right. So look, this setup has been used multiple times by myself and my students in my Discord community. We were trading this exact model today. I took the setup as well as my students who also took this setup. Look, if you want to check out that community and check out my trading course, the 90-minute trader, where I share all my advanced techniques and my strategies with you on how I trade the markets every day, as well as my analysis. You also get a bunch of tools and resources to help you become profitable faster. You can go ahead and check out the link in the description below if you're interested, and you can go and see what other students are doing and what they're learning from me to go and get awesome results just like that. Now, one thing that I want to do is I want to give you a bunch of rules that you can follow when you are trading every single day. Look, when I first started out, I wish somebody told me this, that there were certain parameters and certain things that I need to make sure that I do every single day, but I didn't have that. So I'm going to give you that today. So the key things here, again, you're just going to mark out the 5 minute candle high and low as I've shown you in this video. You're going to trade only at 9:30 a.m. Eastern time. You're only going to be taking a maximum of 2 trades a day. Okay. You either lose twice or you win once and you're done. All right. As soon as you win a trade, you finish. You don't take any more trades after that. You're not going to be trading anything other than a fair value gap outside of that range, right? It's really important that when you're trading, the fair value gap is going into one of those levels, just like I've shown you in this tutorial. Look, if that's not clear, I want you to go back and just watch it again, because the model is really simple to execute. But I know it can be difficult if it's the first time you're seeing this and you're new to this and maybe some of it is a little bit alien to you. So just go back and watch it again. But the rule is that you need a fair value gap closure outside of the range. Okay. Then you're going to put your stop loss just at the bottom of the fair value gap candle. Okay. Nice and easy. And the biggest one, once again, is stick to the 2-to-1 risk to reward ratio. Okay. You're always going to just look to double the money. If you're risking $100, you're just looking for 200. You're not going to look for any more and you're not going to look for any less. All right. Just fixed 2-to-1 risk to reward. and that's the rules. I want to talk to you about psychology, confidence, and risk management. If you followed a diet for months and you never saw the number on the scale move, not even once, you would basically just quit, right? Nobody sticks to something that gives you essentially zero feedback. But if you followed a plan where you could actually see steady progress every single day, whether it was small, just gradual shifts, you would trust it, right? You'd have more and more confidence in that system and you'd stay consistent because you know that it's working. Even if the results aren't perfect every single day, you know that you're making progress. And that's exactly how trading works. Most traders don't even know whether their strategy works or if it has potential to make money long term. Before you start worrying about trading psychology, what you actually need is proof and real information and data that shows that your system has an edge. And look, if you want to go deeper into the mindset side of trading, one book that I really would recommend is Trading in the Zone by Mark Douglas. It's an insanely important book for day traders. It will completely reshape the way that you think about trading. Okay. Just like fitness or swimming, there's always going to be plateaus and tough days. But what separates successful traders is how much they can manage themselves through those dips. The next thing you need to understand, and the part that most traders never seem to get right, is how do you move from just learning to trading with real money? Most beginners go from one extreme to the other. They either hide in a demo account forever because they're just too scared to actually use real money, or they jump right into the deep end and they use way too much money, which ends up leading to really, really terrible anxiety. But both plans are not really the best thing for you, right? Demo trading is fine because you can learn about like where the buttons are and all of that, but it doesn't actually train your mind. It doesn't train you about your emotions. There's no fear. There's no hesitation when you're trading with demo. The real sweet spot is right in the middle where you're using real money, but you're using very small risk. And even if you're just using a couple of dollars, it still engages the part of your mind correctly. Your discipline changes, your patience changes, and now you're practicing a real skill of trading because you're using real money. And that's why I actually recommend starting out with a prop firm challenge. You get access to a much larger account with real rules and consequences without risking thousands of dollars of your own money. It's the best environment to build emotional control and proper risk management strategies. And again, this is exactly why I built my prop firm risk management software. It calculates your exact risk that you have, your daily loss limits, your max drawdown on your prop firm account, and it tells you exactly how much you should be trading without breaking any rules. Everyone in my community gets access to the software for free when they join the course, and it makes passing prop firm accounts significantly easier because the numbers are essentially done for you. Now look, you don't have to jump straight into a massive prop firm account. Just start with a small one, take it seriously, and just focus on executing rather than making money. This phase isn't about getting rich. It's just about developing the discipline that you need and the emotional resilience you need when you actually start scaling up and using big money later. If you can master that transition, everything becomes much easier after that. Now, something really important that was massive for me is you have to track your trades. Every single trade you take, at the very minimum, you need to be trading the basics of that trade. When you entered, why did you enter it, which setup did you use, how much you got out of it, and how much did you lose from it. That alone is going to put you ahead of so many traders out there, even if you're just using a spreadsheet, right? It doesn't have to be this fancy software. It's a massive way for you to actually reflect on the trades that you take. And the massive important thing about this is that because you know that you're journaling about your trades, it stops you from taking really bad trades. This is massive for me. It literally transformed the way that I was trading, right? And look, if you consistently do that, it's going to make a massive difference to the way that you trade. And most importantly, it's going to show you what you are doing when you're trading. Because look, all traders are different, right? We've all got different psychological makeup. And the way that my journal looks is going to be really different to yours. And yours is going to look really different to someone else's because we all have our own nuances, our own psychological things that, mess with us and wherever else. So it's very, very important that you start trading with a journal. And look, it doesn't have to be anything fancy. You can literally just use a Google spreadsheet or wherever else, or you can use something cool, some software, whatever, if you want. But in the beginning, just use a Google spreadsheet. It's literally free and it doesn't really take much time to set up, and you can go ahead and start trading and journaling literally right now with that. And look, let me be clear. None of this stuff matters if you fall into the most basic mistakes that destroy most traders. And And those are what I'm going to go over now. So the first mistake, as we talked about earlier in this video, is switching strategies. It literally traps more traders than anything else. They try a new strategy, they take 2 or 3 losses, they start panicking, and then they want to jump onto a different strategy because they think that that strategy just doesn't work anymore. But the truth is that no strategy can really prove itself in just 5 or 10 trades. You need to really be trading a strategy over 50 trades, 100 trades, executed correctly before you can even judge anything. And most people don't even make it a couple of weeks trading a strategy, because once they've done that, they're pretty much off and starting something else and doing something else. So make sure you're not jumping strategies. The biggest thing that I also see is when people are inconsistently sizing. You have to be risking the same money every single time, the same dollar amount every time. That means that if you're going to decide to risk $100 today, make sure you're risking $100 every single day. If you start changing the amount you're sizing, that starts to mess with your edge, and it can really affect the losses if they start to stack, okay? So you have to make sure you're sizing correctly and the same amount every single time. The next one is trading emotionally after you take a loss. Look, this is a classic trap. You take a hit, you lose, and then you immediately want to make the money back. So you end up sizing up and risking more money with a bad setup only to try and make that money back, and you try to force a win, but it never works, right? Like, every trade is independent of one another. So revenge trading is the fastest way to blowing up your account. Don't do that. Obsessing over your wins instead of obsessing over your process. Being right on one trade means nothing if you broke your rules to get there. And being wrong means nothing if you executed everything perfectly. What actually matters is following your plan over hundreds and hundreds of trades so that you can win over the long haul. Look, even if you win only 40% of the time, you can still grow your account if your risk management is good and your risk is controlled. One good day doesn't make you skilled, right? And one bad day doesn't define you. So don't ruin your account just because of one bad day. Inside my program, The 90-Minute Trader, I break down everything step by step and show you exactly how I trade. You're not left guessing or trying to piece things together. You get the full system. And the best part is the community. In the Discord right now, there's people posting wins every single day, sharing charts, comparing notes, and holding each other accountable. You're surrounded by traders who are basically on the same path as you, right? They're all trying to make more money, they're trying to get profitable, they're trying to build a life of freedom, and they're actually improving every single day. You get access to all of that and all the tools that I've built: risk planners, my journal, my position sizing calculators, and all my software. And everything that I have built, I've built for myself. I've built these tools to actually use in my own day-to-day trading. And a lot of these tools will remove the guesswork for you, and they're going to help you to stay more consistent as a trader. Make sure you're not oversizing or undersizing or sabotaging yourself without even realizing it. And just to be clear, look, you don't need any of this stuff to become profitable. I just gave you everything in this video that you can actually go and execute today and start making money. The course and the community simply accelerate your journey. They shorten the learning curve. And instead of trying to figure this all out on your own, taking years trying to figure this stuff out, you get some structure, you get support from me, you get direct guidance from people in my community, and you can move a lot faster. So if you want to check it out, the link is in the description below. Look, we covered a lot in this video in quite a short space of time. And now you understand why focusing on the process of trading is much more important than focusing on the money. You've got a clear strategy, a clear roadmap of how you're supposed to be executing every day, learning how to trade every day instead of bouncing around in circles and using all these different strategies. You've got a strategy that you can use right now. You understand some of the basic fundamentals and important parts of the market, how price moves and how to read structure even. We talked about support and resistance and all of the stuff that a lot of beginners don't even really understand. And you also understand why we use that one strategy, and you've got a complete mechanical one that you are going to use after you finish watching this video. Something that you can repeat every day that doesn't rely on guessing or gut feeling, right? So you understand that psychology isn't just magic. It's simply having conviction in your system, conviction in a system that you trust, more importantly. You know now how to transition to real money without blowing yourself up, but using prop firm accounts and how that can help you to really accelerate your success. And you know how critical it is to journal. And you also know some of the biggest mistakes that wipe traders out before they even get anywhere. This alone, right? All the information that I've given you here is worth a lot of money. A lot of people have had to learn these lessons the really hard way. So hopefully this video has helped to take a step forward in your trading career. Now, look, if this video was helpful, please make sure you subscribe, keep your eyes out for the next video. And I really appreciate you being here and supporting the channel. So go out there, use this information, and share this video with someone that you think might find it useful.